essentially what this amendment bill has tried to do is it replaces the ordinance that was promulgated on June 26th. Now, this amendment is basically about bringing cooperative banks under the supervision of RBI, as also, empowering the banking regulator to, prepare an amalgamation or a restructuring scheme for a struggling bank without placing it under a moratorium. Now, two things, if we look at the backdrop of what was the trigger to bring such an ordinance. We have seen over past 1 year, we saw PMC scam happen. Now, PMC was a cooperative bank, Punjab and Maharashtra Cooperative Bank. There was also Yes Bank, wherein the RBI had to step in and take control of the situation. So in PMC, we saw depositors sort of lost money. It had to be placed under a moratorium, and so on and so forth. And there were governance issues which were seen, wherein lending by PMC to a single borrower was seen as huge governance issue, which sort of could not be caught hold of by the banking regulator, because the kind of supervision that was required for that cooperative bank was not provided within the framework. So what the government is trying to do is strengthen this framework and address the gaps that were there. So this amendment bill, what it has tried to do is, any cooperative that carries out any banking function will have to be under the supervision of the RBI. So this is a significant move. The other significant move is the restructuring or amalgamation without placing under a moratorium. So we have seen during the Yes Bank as also during the PMC Bank that depositors, RBI had to put a moratorium. So depositors' funds got stuck. So now RBI can go ahead, prepare a restructuring scheme without placing the bank under a moratorium. What this amendment is trying to do is give more teeth to RBI to deal with cooperative banks. Now, cooperative banks have not been cooperatives. A lot of them, they collect deposits from whoever their shareholders or whoever their depositor people are who are members of the cooperatives. But they have never been governed by RBI, or they've never been under the regulatory supervision of RBI as such. So this would essentially bring these cooperatives that were carrying out banking functions under direct supervision of RBI. Now, Finance Minister, during her reply to the bill discussion on the bill, had said, there are about 105 urban cooperative banks that were unable to meet even the minimum regulatory capital requirement, and 47 of them had negative net worth at the end of March 2019. So, had they been under, direct supervision, such a situation would not have been allowed to arise. This thing is that stress in the cooperative bank sectors has really increased manifold, and NPAs, gross NPAs increased to over 10% up to March 2020, and this was over past 1 year. So without the change in the legal framework, it would have been difficult for RBI to sort of really supervise functioning of these banks. That oversight would not have been there. And country really needed that oversight, because cooperatives, essentially there are very small depositors, there are small borrowers. Now in PMC scam, what we had seen is there was just one large 70% of the lending was done to one borrower. So essentially what the government is trying to do is create adequate regulatory framework, empower the banking regulator to able to address these things, to bring out norms, to bring out regulatory framework to address such an event from happening. That is what is being attempted here.